Hello everyone and welcome to ICM's midday session. We have a lot of market movement today and almost stock markets they're crashing. We're seeing a huge drop in major stock benchmarks. The dollar is strengthening across the board across all major currencies. There is a huge demand for the dollar and the shift from the risk on sentiment that we've been noticing for a while to what we call risk off mood, where investors would like to go back for cash and hold mainly US dollar. So this is what's struggling in the market. On Brexit, still no developments. Some headlines are hinting for a possible deal in the coming days, but still we're in a deadlock. For the new strain of the coronavirus, it's just ahead of moving to this U.S. fiscal stimulus deal. It's almost there, so they're just gonna vote for it today. But what's really moving the market is the concerns of this new strain that was found in the United Kingdom, and it showed that's it's faster transmittable than the other strains of coronavirus. So this is just worrying the market a bit, and we're seeing a bit of a clear fear in the market, which is driving stock benchmarks lower. So now let's move to the chart. We're seeing the euro dollar dropping towards 21.30 from almost 100 pips lower on the day. So what you can just highlight in terms of bigger trends, since all this rally that took place was with this certain dynamics. So you can just try to go back to the basics of this rally. So you can just draw this channel that we've been highlighting for a while on the euro dollar. Here we had a double top with a divergence, and then the market moved lower. So what you can expect is just some support near the 100-hour exponential moving 100 H4 exponential moving average, which is just coinciding with the bottom of the channel. The next support zone is definitely 2060, 2050. This area here was a key area. It could be the first possible stop for the drop that we are witnessing. While any move back higher above 122 could just take us higher to retest 2270. The British pound against the United States dollar, also a clear sell-off taking place, since everyone is just locking the move from the United Kingdom, and they're just moving also to other lockdowns, just control what's happening with COVID-19. So this is what we're yeah, so this is what we're witnessing on the pound. You can just go back to where all this has started. You can go back to May 2020, and you can just draw this trend line. It's a valid trend line. You can see how many times this trend line was tested, and then we got a bounce from this trend line. So among all these, what's happening now with the new COVID strain in the United Kingdom and all the vagueness of the Brexit talks, maybe we could pay a visit to this trend line, which is almost steady at 131, close to the 100-day exponential moving average. So this is a possible first target for the pound. We just go closer to the hourly chart. You can just highlight the previous bottom and the trend line, and following the trend line, the next possible support area is a bit far also, which was previously one of the key areas, also near almost 129. So this could be 128.65, 129. So this will just depend on the volume that's being traded in the market, especially now since we're just moving to holidays, where we could be possibly seeing some liquidity crunch, which could move prices a bit faster. In order to turn bullish again on the British pound, definitely we need some clear headlines regarding Brexit, and then another move above 134, and maybe closing the gap. But now we're almost 200 pips away from this. So this is for the pound against the dollar. The dollar against the Japanese yen, we can see also the dollar strengthening. On the hourly chart, you can see a move above the 100 and 200-hour exponential moving average. We're moving back to key range. In order to turn a bit more bullish on the dollar against the yen, we need to clear above 104.75. This could be the possible coming target. While also, so now we're set in a bigger range, 103, 102.80, 102.90, and 104.75 to trade in for a while. The dollar against the Swiss franc is also strengthening, however, it's a bit less than others. Possible coming resistance could be near 89.45 ahead of the previous resistance of 0.9, almost 0.8980, while a move back lower below the 200-hour exponential moving average could just trigger a retest to the bottom. So this could be a key level. If we move back below it, it could trigger some further selling on the pair. The Australian dollar against the United States dollar, since it's just so risk sensitive, we're seeing a bit of a move now. We're adjusting the 100 H4 exponential moving average for the first time since the break in October. So now we're moving lower. Watch out for a possible support near the 200 H4 exponential moving average, which also coincides with the previous stop that was set near almost 74.15. So this could be the possible coming support zone. While we need definitely to move back above at least 75.10, 75.20 in order to gain some momentum back again in the market for the bulls. The New Zealand dollar against the United States dollar, what we are seeing on the Australian dollar, but the 70 psychological level is just a key level. A move below it could just trigger a bigger downside move towards the previous stops. Mainly 69.15 could be the coming support zone, while a move back above 71.05 could just be bullish again for the pair. The dollar against Canadian dollar, also since oil is just weakening again, so we're seeing a bit of a move, the dual move. So the dollar is strengthening, oil is weakening, so this is also impacting the dollar against the Canadian dollar. We were able to trade above the 200 H4 exponential moving average for the first time since also October. So now we will just go a little bit further in the chart and draw trend lines combining the key tops. So this could be the possible coming zone, which is also coinciding with the 100-day exponential moving average. So watch out for any spike higher towards almost 130.80. A break above definitely would lead to further gains on the pair, while in order to turn bearish again, we need to move back below 28.40. Gold prices. On the bigger picture, we can just draw this channel that we are trading in. So we were closer to the channel, and then we got this sell-off that took place a while ago. So if we go to the hourly chart here, this is what we're witnessing. We moved back lower towards the 100 and 200 hour exponential moving average. You can draw also this trend line combining the previous bottoms, but watch out for the break below this trend line. It could lead to a bigger drop towards 18.17. However, as long as we're above, and if we were able to move back above 18.75.7, this could be bullish again, and maybe we could be retesting 18.96. Silver price is the same. If we just go for the H4 chart that we've been drawing on the trend line for a while, you can see that the market was able to rally sharply when we were able to trade above the trend line. So you can just draw this. You can see how the market rallied up on the break, and now we had a move lower, and now we're trading back inside this range. So this is the market tested the 200-hour central moving average, found support at the previous stop, and then moved higher again. So this is what we similarly drew for the Australian dollar, and now we could be poised to retest the previous highs of almost 27.40 if we were able to trade back above 26.50. As long as we're below 26.50, the rallies could be sold. Maybe we could be moving back again below $25. Oil prices also, we were trading inside this channel for a while, then the market now is moving lower. We talked about this formation last week, that the market could be dropping towards the 200-hour exponential moving average, but maybe it couldn't hold. It can't hold, since a couple of times we found some buyers near this moving average, so this makes the level vulnerable, and definitely this is the market was finding key movers, which are the coming lockdowns. So this also drove the prices lower fundamentally. Moving to some technical levels, definitely 45.10 and 44 remain key support levels, while a move back above the previous resistance of 47.85 again for oil prices, and we can continue again the rally towards $50 per barrel. Moving to Dow Jones, which is having a bit of a recovery now. So finally we were able to break below this consolidation zone that we've been talking about for a while. So this was the key range that has been holding for a while, and we had a couple of retests to the highs, and then the market now finally was able to break lower what could be possible supports for the Dow Jones. The previous stop 29,200, and again at 28,940. These could be the possible support zones for the Dow Jones. While the move, we need definitely to move back above the 100 H4 exponential moving average, which currently coincides near almost 29,900 to turn bullish again. Maybe we test the previous stops. However, as long as we're below these levels, maybe we could be looking for selling the rally on the Dow Jones towards this support area. So this is all for today's session. We just hope that you stick to risk management techniques, since we're seeing sessions of high volatility in the market, and this could impact your trading. All the information, analysis, opinions mentioned in this live session, they're only for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. This is all for now. Wish you safe trading.